Hello, and welcome to this week's edition of Tax in 10 with me, Rachel D'Souza and Andrew Robins. Now, as we record, there are still a few days before we get to our opportunity to vote at the next general election. Anyone who knows us will be aware that our political views are a little bit different. So rather than spending 10 minutes shouting at each other, let's stick the politics to one side and think about policy. We all know that polling can get things badly wrong. So there is still genuine uncertainty about who will form the next government and what sort of majority they might have. In the short term, does that mean that we can't give any advice and clients should simply hide under the duvet cover until it's over?
Well, given that we're in full election mode, I'm going to answer that like a politician and say,
Mhm.
Rachel, I'm very glad you asked me that question. But before I answer it, I think it's important that I talk about something totally different. To be serious, I wanted to start by giving my two P's worth about the timing of a post-election budget, because I think that's actually relevant when thinking about what planning people should be doing today. So, Rachel Reeves for Labour has already said that if Labour forms the next government, there will not be a budget before the summer recess. And I think it's a safe bet that the Conservatives wouldn't squeeze a budget in before summer recess either if they're re-elected. So that really means that the earliest we're likely to get a post-election budget will be the first 2 weeks of September. That timing could work well, given that the Office for Budget Responsibility says that it needs 10 weeks to check all the figures before signing the budget off in advance. So you'd have time for whichever party is elected to come in, work out its figures, get them to the OBR, and then get that signed off for first 2 weeks in September.
Mm.
If we start looking beyond early September, we then start getting into party conference season, and I think it's really unlikely that any party would schedule a budget, in that second half of September or early October. There might be some appeal in waiting until October or even November for a budget, so that the Chancellor has time to get to grips with the post-election landscape. But whoever is in power, that seems like a long time to wait.
Yes, I agree. It seems really unlikely that in the aftermath of an election victory, any party would want to wait 3 months before setting out its fiscal agenda. So, yeah, early September would be my bet as well. Now, Andrew, that's all very interesting for us tax people, but why should anybody else care?
Well, Rachel, I'm glad you asked me that. The main reason, I think, is because actually a lot of my clients have been asking about what pre-election or pre-budget planning they should do. Now, just as a quick aside, it is theoretically possible that a government could come in and make tax changes that take immediate effect from the election date. I would be frankly astonished if that happened in practice, because it suggests that there's either some sort of catastrophic emergency going on, or else the existence of some sort of tax advantage that is so objectionable that it needs to be shut down from day one. And I just don't see that.
Yeah, I actually think it is unlikely that any tax changes will take effect from the date of the budget either. But the chances of this happening are higher. And of course, it is a reasonable concern for clients to have. And even if legislation doesn't have full effect from the date of the budget, we have seen, cases in the past where what they do is bring in anti-forestalling rules. And these are rules specifically introduced, which mean that although the general rules don't apply until a later date, any planning undertaken to try and circumvent those new rules will be ineffective.
Yeah.
Yeah. So one of the big concerns that I'm hearing from clients is that CGT rates could go up. Now, realistically, this is not something we would expect under a Conservative government. And in the last few months, both Keir Starmer and Rachel Reeves have said that they have no plans to raise CGT rates. Now, this falls short of an unequivocal statement not to, so naturally clients are worried. As a result, if you want to be super cautious, there is a lot of sense in completing any capital disposals you have planned before the end of August.
And I think just to drill down into that a little deeper, there are a range of situations where this might actually be worthwhile. One example would be if you're planning to make gifts. So the gift of a business asset might currently qualify for business holdover relief, and that would mean that any capital gains tax on the disposal can be deferred indefinitely. If you're worried that holdover relief might be abolished, then it makes sense to take advantage of it now. But equally, gifts of other assets, which are immediately subject to CGT when you give them away, making a gift now means that you guarantee paying 20% capital gains tax on those gifts. So if you want certainty, that might be quite attractive, although obviously the downside is you've got to pay 20% capital gains tax, so you're crystallizing a liability. But for some people, that's actually an attractive option.
Yeah, agreed. And the same logic might apply to any individual or entity that holds assets that have gone up in value a lot. You know, as an example, if I'm worried that CGT rates might double, then the tax payable when I sell my personal company could be much higher in the future. So one solution would be to effectively engineer a disposal. And this can be done, for example, by selling to a family trust, in effect crystallizing the capital gain today. Now, in reality, though, it's really quite difficult to recommend this to anyone because you are guaranteeing a tax bill now with no guarantee or even knowledge as to when you are actually going to sell up and generate that cash liability, that cash in order to settle the liability. On the other hand, anyone who has assets in an offshore structure, such as a trust, might be able to get the same advantage, but without the immediate tax bill. So, so there are definitely a few cases where this will still be relevant.
Yeah. Just continuing the theme of gifts, if you are considering those as part of an estate planning strategy, you might also want to act before the budget. So there's been speculation, and I cannot emphasize enough that it is speculation, that a Labour government might limit business and agricultural inheritance tax reliefs. And for other gifts which don't get any relief from IHT anyway, the sooner you make them, the sooner that 7-year sort of survival clock starts running. Also, in just thinking about other pre-budget planning, both main parties are committed to not increasing income tax and national insurance, so there doesn't seem to be any point in accelerating bonuses or paying dividends to protect against possible increases in income tax rates. And, so far as income is concerned, the best strategy is likely to be to hold off as long as you can, because the longer you wait, the later when you actually have to pay the tax.
Now, of course, a big topic of conversation, certainly amongst parents, is Labour's proposals to add 20% VAT to private school fees. A lot of schools already have fees in advance programs or options, and many more parents are seriously considering making use of this type of a facility in order to try and beat the introduction of VAT on fees. Back in January, the Shadow Education Secretary implied that Labour would act to block prepayment to save VAT, but we've not seen any further announcements or information from Labour on this. Now, of course, the trade-off is that if you pay the school fees in advance now, you maximise the likelihood that VAT will not be applied to them. But of course, there's no guarantee that this will work. And of course, you have to have the cash to be able to stump it up now and pay it over to the school.
Just one final sort of thought on pre-budget planning.
Mm-hmm.
Historically, taxpayers have often tried to push through property purchases in advance of a budget to protect against stamp duty changes. Now, as a reminder, stamp duties on land are independently set by the Scottish and Welsh governments, so the budget in Westminster would only affect England and Northern Ireland. I don't think we're expecting any changes to SDLT rates at the budget, apart from additional reliefs for first-time buyers under the Conservatives. That probably means that there's no need to rush to complete your purchase, but obviously there's no guarantees, and so viewers of a nervous disposition may want to take no chances and move as fast as they can anyway.
True. Turning briefly now to measures announced in the spring budget, because two policies of note have not been included in the finance bill. Firstly, the measures abolishing the furnished holiday let regime, and secondly, the abolition of the remittance basis and the concept of domicile for tax purposes. Now, in respect to furnished holiday lettings, Labour have not made any comments on what they would do, but equally, there's no reason why a future Labour government would not simply adopt the Conservative proposals. I don't think there's anything particularly controversial there. Now, with regard to domicile and the remittance basis, this is a long-standing priority for the Labour Party, and I would be amazed if the Conservative proposals do not go through, regardless of who is in power. Of course, the details will inevitably be a little different, if we have a Labour government. So it is a guess, but I am confident that domicile will be abolished as a tax concept and that the remittance basis will go for future income and gains when these rules take effect. Now, we know there's been quite a lot of lobbying already for the start date of the new rules to be pushed back to April 2026. Personally, I think this would be sensible, but I can't actually see it happening.
No.
I think if we see a new tax system for non-doms and new arrivals, it will apply from 6th of April 2025, as originally sort of expected.
Yeah, I think that's absolutely right. I think we 100% need to plan on that assumption. I mean, of course, in a few days' time, we will have a much clearer idea of what the new government will look like anyway.
True.
So it is possible that any decisions being made at the moment will have to be reviewed. But I think the main message here is that if you're feeling nervous about the future, you should target the end of August 2025. Sorry, August 2024, getting ahead of myself. Target the end of August 2024 for completing any planning you're doing so that you've done it before the next budget. Don't get hung up about the date of the election. The budget is the first likely pain point. But actually, more than anything else, I don't think there's a need to panic about this.
Yeah, agreed. So, on that positive note, have you got a recommendation for us this week?
I do. Back in the day, it must have been like late 1990s into early 2000s, Channel 4 had a brilliant program on a Sunday tea time called Time Team. We had a group of professional archaeologists who had 3 days to go and dig up a site, and it was brilliant. It was really good. The same team who were doing this 20 plus years ago are now doing it, same format, so everything's same about it, but they're now doing it on YouTube. So you can go and get YouTube videos of Time Team. Partly it's amazing because, of course, they're all 20 plus years older. And these were people.
Decrepit, you mean?
Well, they've kind of aged at strangely enough, they've aged at the same rate I am, and a lot of them may have been sort of 10 years older than I was. And that's fascinating, but B, the format still works really well. It's really good fun. It's really interesting. If you've got any interest in history at all, Time Team on YouTube is really worth a look.
Oh, brilliant. Okay. Right. Well, thank you for listening to us. That's me, Rachel d'Souza, and Andrew Robins, tax partners at RSM. Please do let us have your comments and feedback, and we can be contacted on rachel.desouza@rsmuk.com or andrew.robins@rsmuk.com. Until next time, bye for now.
Bye.